Hey YouTube, this is Zach with Achilles Financial, and today we're going to be talking about Nvidia because they announced earnings last week, and this is a super interesting company because they have had a lot of volatility this year, and they are going to continue to be a big mover. As part of the Magnificent Seven, they have had a monster run this year. I would highlight the 52-week range you can see here, $138 within the past 52 weeks. To highs last week of $505. That is a massive run during that time, up more than 220%, and they have been a key contributor to the stock market's increase this year. I would also like to point out while I'm viewing Nvidia that we are on Charles Schwab. If you're a long-term subscriber to the channel, I would note that we generally are going to be looking at or evaluating items leveraging the TD Ameritrade platform. However, Charles Schwab, they purchased TD Ameritrade, and I finally got the privilege or was voluntold to move over. And so far, I've been enjoying the platform, but that is probably another conversation, but one to showcase why things look a little bit different. So back to Nvidia. This is a company that I have always been a very big fan of. I've held shares historically, have not enjoyed the massive run that they've been on this calendar year as a shareholder. And as someone who's been mostly short tech this year, this has been fairly painful. However, what I would note, and this continues to be one of my concerns, is that when we're talking about earnings, the company continues to grow at a comfortable level. We're very, very impressed with their capabilities. So you can see on a quarter by quarter basis, they are continuing to increase their expected earnings per share. So we're very impressed with those capabilities. We've showcased massive beats over the past 4 quarters, so the company continues to trade at an incredibly strong basis. However, my big concerns are going to be on these forecasted numbers you can see here, where we've got that forward price to earnings ratio of 39.4, current price to earnings of 63.08. To put that in perspective, I recognize they're a market leader, but these numbers over here are huge in terms of the historical comparisons. TSM, Taiwan Semiconductor, which brings in quite a bit more money than Nvidia does on a pure earnings basis, or even AMD, who's a much smaller company trading at a massive premium compared to their actual sales. Again, this is just groups that is very, very impressive growth, but very worrisome from a valuation perspective. When we're looking at those valuations, you can see on the list across the board right here, price to sales, what that is the previous day's closing price divided by the sum of sales per share over the trailing 12 months. So they're taking that revenue number, putting it over the share price to get this. And you can see on an annual history basis that they are trading at massive premiums compared to where they've been historically. Because of that, I have some major concerns with where the stock can go from here. However, I do recognize I've been saying this since they were trading at half this valuation. So the stock market continues to show some massive increases on a PE basis, on a price to sales basis, and I just don't think this is sustainable. And right now they are heavily benefiting from a number of things. So I don't want to say that this growth is impossible. I think it definitely can be. And primarily their capability is coming from those profit margins that the rest of the industry has trouble keeping up to date with. But they're actually forecasting gross margins. So this one right here is currently at 70%. Remember that as they continue to get some of their data centers online, as they continue to get some of their generative AI capabilities up and running in terms of being the key provider there, we could actually see this number increase from about 70% where it's at now to anywhere between 73 to 74% than what was going on for this calendar year. The question is going to be does that increase and accompanying increase in sales benefit them to the tune of their total profit or to their total market valuation in terms of the 1 trillion or really about $1.1 trillion market valuation that they have right here. The impressive capabilities that they are going to continue to benefit from is continue to increase in their GPU segment as well as in their data center segment, which are both going to heavily be benefiting from the generative AI movement. So the question is, can they take these profits and move up in a material way? What I would highlight and what I will continue to highlight is, even though they are growing sales in a very strong capacity, again, if we're looking at the fundamentals basis, when we're looking at a total revenue down below, you can see this on a year by year basis. These numbers are increasing in a material fashion. Again, they're going to be showcasing this most recent one here momentarily. But even though their revenue is going up in a dramatic fashion, you're still going to look at a company that's going to be around 40 to 50 million or billion in total revenue and valued at $1 trillion company, compared to Google, Microsoft, other $1 trillion companies that are bringing on hundreds of billions of dollars in revenue on an annual basis. Because of that, I continue to remain bearish on this company, much to my pain point. I totally recognize that. But again, when we're talking about a single year movement right here, which I do anticipate they will continue to benefit from AI, but generative AI will continue to be something that is commoditized. And as other individuals are able to take advantage of this, as other larger players are able to leverage this information, or as they are able to leverage some of the capabilities here, while I think that Nvidia will continue to benefit, I don't know if the 100% growth year over year story is going to be able to continue to move in the same direction. And because of that, or rather, I'm not the only one who has that belief system. What I would note is, if you look at the insider shares or the insider trading, which I am unsure if that is leverageable on Schwab, or at least I'm sure it is on A Screen, but the only insider buying or selling that is occurring right now is strictly on the sell side. So on a routine basis, you are seeing the individuals who own shares in the company continue to punch that sell button and take advantage of this massive run right here. And as long as that continues to happen, I'm going to have concerns over, is this a company I want to stay invested in for the long term, when you can directly benefit from it by owning tech-based ETFs where your exposure is not going to be entirely concentrated. Again, 2023 has been a wild year. That doesn't mean that this and the other groups of the Magnificent Seven will continue to be carrying the entire market on a go-forward basis. As always, everything in this video is my opinion. It is interesting to review this information on Schwab. So if you have feedback on the information here, or questions or feedback on NVIDIA, please let me know in the comment section down below.